You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? This is Mike from The Moose on the Loose. Yes, I am back. A quick note on that, actually. I just want to thank you guys for reaching out on X, for sending me emails, making sure that I was okay. I am doing just great. And I'll tell you a little bit more about why I took a pause tomorrow. But anyways, that was like unexpected. I was like, wow, like a lot of people are listening to the Moose. So anyways, thank you guys for your support and for thinking of me. But yeah, all things are good. More to come about this tomorrow for Business Friday. But today I am back, and so are low interest rates. Yesterday, and I thought it was like a good way to come back this week. Yesterday, the Bank of Canada cut their interest rate by another 50 basis point. So it's been a few cuts that we have since the beginning of the year. We started in June of 2024. No, I mean, not too long ago, like 6 months ago, the overnight rate was actually at 5%, and now we're down to 3.25. So a lot of people are just like, wow, that's a great news for the economy. It's great for the country. I mean, not really. You know what? So those people are probably thinking the same way as, I don't know if you remember, but when I was a kid and I was like very, very, very sick, I used to go, you go to the doctor, and then the doctor give you that prescription, which is like a banana taste syrup. I mean, it tastes like so good, and it was just like super happy to get it. And I'm just like, yes, I got the banana syrup. But really, you get the banana syrup because you are not feeling well, because you are ill and you need medicine to get back on your feet. And having such like rapid interest rate cuts is actually because of that. It's because the economy is not doing that great. So yes, it's a very good news if you are about to renew your mortgage, because interest rates will follow. And if you're on a variable rate, definitely it's going to give you a little bit more room to breathe. So yes, for that specific angle, it's good news. For the rest, not that much, because actually the Bank of Canada had to cut interest rates once again because it faces immediate and future threat. So let's talk about the immediate threats for now. Unemployment rate is getting closer to 7%. So I think it was like 6.8 the last time I checked. So not incredibly strong, right? So a lot of people right now are looking for jobs and they're not able to find one. There's obviously a direct link with a weaker global economy. So when you look at the gross domestic product, the GDP, not growing super fast the last quarter. So you look at people looking for jobs, not getting them. You look at the economy that is seriously slowing down. And I mean, at least inflation is back to normal. So those are like the immediate problem that Bank of Canada has to deal with. So it is trying to reach that unicorn phenomenon of a smooth landing. Maybe they're gonna make it. I don't know. Like I'm not here to tell you like what's gonna happen next, because I mean my crystal ball is just as good as yours. But what I see right now is, of course, the same thing as Bank of Canada is seeing, is a slowdown across pretty much everything in Canada. So the solution is, let's drop the rate. But there are also future threats that are not going to help the economy in 2025. The first one, the one that we have been talking about since November 6th, I think. Of course, you can see me coming. Tariffs. Tariffs that our dear neighbors, President Trump loves tariffs so much that he's putting that on his toast in the morning, and that replaced peanut butter, I guess. So a lot of threat about this. At this stage, I mean, nothing is happening, but of course, I mean, let's not be blind. We're going to face some heavy negotiation with the US, and the tariff is going to be pending over our head, and probably that some of them will be actually put in motion, similar to what we saw during the first mandate that Trump was in between 2016 and 2020. There was some tariffs involved, some heavy negotiation as well. So we'll have to deal with that. The thing is, when you look at your portfolio and you're thinking, oh, I want to protect myself from tariffs, it's going to be very, very difficult to do that. On one way, you're going to have a lot of Canadian companies that are selling goods to the US or products to the US. So, of course, there will be tariffs on that. That's going to slow down the sales for sure. But if you're just focused on US stocks, the other problem you're going to have is, technically, if you're raising tariffs, it also means that prices are going to rise. And if prices are going to rise, well, it's going to hurt the global economy, not just in Canada, but also in the States. So everything's going to be more expensive for consumers, regardless of where you live. And that cannot be really good, especially because we just finished taming the inflation, and now we're kind of like creating another problem in the US for that. So we'll see how it's going to go, but this is also something that Trump and his team will have to figure it out, because it's not without any impact for his own country as well. The other threat that we are looking at is immigration. So we now know that we're going to have like less immigration coming in 2025. And that will, of course, not help grow the economy. So less people coming in, less people working, less people buying stuff. Well, you get it, weaker economic growth as well. So short term is not looking that great. Like midterm, like plenty of clouds around. So I think it's a smart decision to just smoother everything up right now. Bank of Canada already said that more rate cuts could happen in 25. They will likely be more more in the range of like the 0.25%, so 25 basis point instead of 50, because 50 is quite aggressive. So we had like 2 major drops so far. Not necessarily convinced that it's going to happen again, but if you see like 1, 2, maybe 3 rate cuts of 25 basis point each in 2025. I mean, of course, Bank of Canada will have to adapt according to the most recent data. So what I'm saying right now in December may not be true at all in April of 25. So we have to adapt. And that is also what's going to happen with Canadian companies selling goods to the US. They will adapt. Maybe they will move their production to the US to avoid tariffs. Maybe they're going to find other customers elsewhere. Maybe they're going to find another solution. Maybe some states in the US will also put some pressure on the government to ease some of those tariffs as well. So there are a lot of what ifs right now. So the solution stays the same. Make sure that you have great companies with great balance sheet and solid financial metrics in your portfolio, and then you're going to be good. Because that's pretty much what's going to happen. Consider that I don't expect that we're going to have a very strong Canadian dollars in the coming months. It's probably going to continue to have a weak dollar. I don't see really how it could happen that we like our dollar bounce back by like 10-15%, but who knows? Maybe I'm wrong once again. So again, the solution here is to be diversified between both countries. So especially if you plan on going to the US, having some US investment, US dollars could protect you a little bit more. So all right, Moose. Well, that's enough for today. I hope that you will have an amazing day. Tomorrow I'm coming back. Don't worry, and we'll have like podcast next week. So you'll know a little bit more about it tomorrow. All right. So take good care, and in the meantime, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.